Hello and welcome back to G2's weekly market update, where we break down the key market moves and economic developments around the globe and explain what they mean for investors like you. United States. Stocks fall on rising US China trade tensions and government shutdown concerns. Major US stock indexes declined for the week amid worries about escalating US China trade tensions and the ongoing government shutdown. The Nasdaq Composite and S&P 500 spent much of the week positive, bolstered by AI-driven tech deals including a strategic partnership between AMD and OpenAI, which lifted AMD shares over 20% on Monday. However, equities fell sharply on Friday after President Trump hinted at potential massive tariff increases on Chinese products in response to China's proposed export controls on rare earths. Gold continued its record breaking rally, surpassing $4,000 per ounce, highlighting heightened geopolitical and economic uncertainty. With economic data disrupted by the shutdown, investors focused on the Federal Reserve's mid September meeting minutes. Policymakers expressed concerns over persistently high inflation and a weakening labor market. Most judged further easing likely appropriate later this year, though some advocated a cautious approach. Consumer sentiment held steady in October, with the University of Michigan index reading 55. Expectations for inflation in the year ahead slightly decreased to 4.6%, while long term expectations remained at 3.7%. US Treasuries advanced as yields fell sharply, reflecting trade concerns and safe haven demand. Municipal bonds held steady while investment grade corporates underperformed and high yield sentiment softened amid macroeconomic uncertainty. Europe. European stocks slide amid political unrest and weak economic data. The STOXX Europe 600 ended 1.10% lower, with Germany's DAX down 0.56%, France's CAC 40 falling 2.02%, Italy's FTSE MIB declining 2.80%, and the UK's FTSE 100 easing 0.67%. Profit taking after record highs, political turmoil in France and trade tensions weighed on sentiment. Germany's industrial output fell 4.3% in August, with sharp declines in auto production, machinery, and electronics. Exports to the US dropped 2.5% sequentially, fueling recession concerns. The coalition government responded with budget cost cutting measures and subsidies to support the auto industry. UK housing activity slowed in September, with Halifax reporting a 0.3% sequential decline in house prices. The RICS measure of buyer demand remained negative for the third month in a row. Meanwhile, French political instability continued as Prime Minister Licorno resigned and the opposition parties rejected President Macron's new cabinet, prompting calls for new legislative elections. Japan. Nikkei surges on LDP leadership outcome, yen weakens. Japan's stock markets rose sharply with the Nikkei 225 up 5.07% and Topix up 2.19%. Investors welcomed Sanae Takaichi victory in the LDP presidential election, seen as favorable for market-friendly fiscal policies. The yen weakened to JPY 152.8 per USD on expectations of expansionary fiscal stimulus and continued loose monetary policy. Political uncertainty remains as the Komeito party withdrew from the coalition, casting doubt on Takaichi's path to prime minister. The 10-year JGB yield rose to 1.69%, reflecting expectations of rapid fiscal stimulus. Wage growth slowed to 1.5% year on year in August, and real wages continued to decline while household spending rose 2.3% year on year. China. Mixed performance in China's holiday shortened week. Chinese markets ended the week mixed. The CSI 300 fell 0.51%, Shanghai Composite rose 0.37%, and Hong Kong's Hang Seng dropped 3.13%. Markets resumed trading on October 9 after the 8-day Golden Week holiday. Preliminary Golden Week data suggested weaker than expected consumption, with retail and restaurant sales up 3.3% in the first half of the week, and passenger traffic rising 6.2% year on year. The slowdown contrasts with May's Labor Day holiday and highlights challenges in Beijing's push to rebalance the economy toward domestic consumption and services. Analysts are closely watching China's upcoming fourth plenum for insights on the next 5 year economic and social development plan, which may influence fiscal and monetary strategies. G2 takeaway. This week underscores the sensitivity of global markets to policy, geopolitics, and consumer sentiment. US equities were rattled by trade tensions and the government shutdown, despite strong AI sector enthusiasm. Europe contended with political upheaval and soft industrial output, particularly in Germany. Japan's market rally reflected political optimism tempered by lingering coalition uncertainty and slow wage growth. China showed muted consumption during Golden Week, reinforcing the challenges of its economic rebalancing efforts. Investors should stay vigilant as market sentiment continues to respond strongly to policy signals and geopolitical developments. And that is your G2 weekly market update. Thanks for tuning in. Remember to like, share, and follow for more insights. We'll see you next week. Thank you.